Welcome to Finance in the Clouds. Modern finance is broken, forcing finance and accounting teams to work like it's 1985, the year Excel was invented. Here, we talk about the struggles finance teams face in fast-growing companies and discuss how they can spend less time catching up and more time in the clouds. I'm your host, Jake Jones, multimedia producer and brand influencer at Zone & Co., and I'm joined this week by Tyler Santos, VP of Engineering, and Joe Scavotto, Senior Director of Solution Consulting, both here at Zone & Co. Thanks for joining me again today, guys.
Hey, thanks, Jake. Thanks for having us back.
Thanks, Jake. Happy to be back.
When you're busy running your business, things may seem like they're running smoothly. But in reality, there may be an issue with your financial data. Things may be working now, but will they as your business scales? And could business be better? These are important questions that point to the need of an ERP system. When is the right time to make that change? That's what we're here to discuss. Guys, I'm really excited to get into this topic of when is the right time to transition into an ERP. But before we really get into that, I do want to give some space. I'll let you guys talk a little bit about yourselves, what you do here at Zone, and who you are.
Hello, everyone. My name is Tyler Santos. I have been with Zone for almost 4.5 years now, and I run the engineering development team here. Me and my team work on building customizations for all of our NetSuite clients to build enhancements to their business processes within NetSuite, as well as we work on the actual product development of our suite apps. So Zone Billing, Zone Payments, Zone Approvals, Zone Capture, etc. So thanks for having me today.
Hi, everyone. I'm Joe Scavotto. I run the entire pre-sales team here at Zone & Co. We focus all about demoing to our existing and new customers. I've been at Zone for about 3.5 years now. And prior to that, I was actually solution consultant at NetSuite. So I've been in the ERP space for a number of years. And then prior to that, I was actually in accounting. So living and breathing what a lot of individuals are going through, accountants, controllers, on a day-to-day basis. So happy to be here again.
Again, excited to have both of you here. A lot of expertise in this call. So really excited to talk about when is the right time to transition into an ERP. And as we kind of joked before we started recording, the time was yesterday to join an ERP. So let's just jump into the topic. So Joe, when is the right time for a business to transition to an ERP?
In all honesty, I really like to think of it as, companies are growing, taking a step back and saying, what am I doing on a day-to-day basis? And am I doing it in the most efficient manner? It's sometimes very hard to say, hey, everything's running great, right? Everything's working. My day-to-day processes are fine. But when you do take that look back, you'll start to notice when you're not on an ERP that gives you the ability to scale, that things are actually painful. And that is where you're going to start uncovering more and more of that. That's almost taking a little bit extra time to do bill entry, taking a little bit extra time to close the books at the end of the month. And that time might not seem like a big thing today, but that can rapidly scale into hours and days and weeks if you don't have a full ERP system that's helping you manage your day-to-day operations. So small little things are going to add up very quickly, but you don't always notice it when you're living it day to day, right? I dealt with a lot of controllers and they talk about, their close process takes a number of days or a number of weeks. And you kind of uncover what the root of that is they have a lot of day-to-day manual processing, but they also don't always know enough about the numbers as well. And we'll talk about that a little bit more as we kind of go on, but understanding what your numbers mean, what they represent, is what an ERP gives you that options to do.
I think like last time Joe and I were on the podcast, we talked a lot about, and Joe just kind of mentioned it, is scale. What we see a lot of people kind of struggle with as they try to scale their businesses and grow their businesses is that their ERP can't keep up with them. And to Joe's point, it's that close process, it's their collections, their billing, etc. And so whenever you're starting to ask yourself those questions of why is this so painful? Can this be better? Usually the answer is yes, there is a solution, and that probably is your first flag to upgrade and get to a new ERP. I also like to think of it too from a more functional use case of when we look at businesses, you have your profit centers and your cost centers. Historically, like finance is kind of a cost center, like running that organization. But if you try to make that a more intuitive portion of your business that say, hey, like finance is enabling the business to grow. We're enabling ourselves to move faster and adding more value rather than just being a reactive functionality of the business. You become a business attribute rather than a business detriment. And I think, looking at it from that lens enables you to say, hey, we need the tools to do that capability.
Joe, you brought this up, a phrase to my mind of, if it's not broken, don't fix it. That's such a mindset that we can get stuck in, where maybe it is working, maybe it's not broken, but could it be better? Could there be an easier solution? And to your point too, eventually it will be broken. Eventually it will be too hard to keep up with. And it's important to stay ahead of that. What are some of those signals or some red flags that maybe as a business owner or even as a CFO, what would you start to see that might alert you like, hey, maybe we need a better solution. Maybe we need to start looking at an ERP. What would some of those signs and signals be for you, Joe?
Yeah, I kind of think of it in a couple different manners, and Tyler kind of hit upon something there at the very end, is finance can help enable your company, right? I've talked to people that says sales would like to sell our product a certain way, but they can't because finance can't support it. That's an opportunity that, hey, finance would have to have so much manual work, so much intervention they just don't have the time. We don't have the bandwidth to be able to support that, right? That's when you really know that you're really inhibiting your company, right? You're not giving it the tools, the mechanisms to actually grow and scale, over that period of time. And then I think the second one, right, to talk about, leveraging finance, but, I like to think of it from the AR clerk or the AP clerk. What are they doing on a day-to-day basis? And are they just spending time entering data in the system? Are we giving them a value in the company? There's a lot of options out there to get that information in automatically. We're not having to have a manual intervention, because then you can take a look at the business, talk about the numbers earlier. But when you actually can, in real time, know how you're performing midway through January, that can give you an option to make a game time decision that, hey, I need to shift something, realign focus, not wait to the end of the month. Because if I wait to the end of the month and books don't close for 1 or 2 weeks, now you're talking middle of February that you could have made a change mid-January. And that real-time decision can have drastic results in your business. For the AR and AP clerks who are living and breathing the numbers on a day-to-day basis, but they don't have time to look at it holistically because they're just working on getting data in there, sending out invoices or payables.
From my seat, where I see it on the operational side, when we see companies that come to us, they're trying to scale, they usually have a smaller accounting system that they've been working in since they started, and they just spun it up when the business got originally initiated just to keep the lights on as an activity. And as the company grows and scales, whether that is within their product or within their sales team, or whether it's their go-to-market activities, what have you, usually there are more requirements of finance in order to make those activities, like Joe was saying, capable. So what we see a lot is, they stick with one system and then they start building. An engineering team will start building a database over here to, capture usage of a product, or they'll keep a database over here to authenticate whether the licenses that a company sells, or they create their own inventory management system via another database. And all of a sudden you have this situation where the business operations is spread out over these systems that are custom built or custom installed by different departments, and they're not aligned. And it actually just creates so much more overhead work and cost for a team. So when you start to think about what are business capabilities that we need to do and what do we need to achieve, that is the immediate time of let's try to add to the capabilities of functional processes that we have, aka the accounting and the ERP system, rather than starting to build new things.
Yeah, you guys bring up a lot of great points of not only what possibilities, as you kind of mentioned, Joe, with different models. The sales team may want to sell it one way, but the business just can't handle that. The finance team can't handle that. But then also, Tyler, kind of what you're bringing us to, of there are issues. This can really start to cause problems later on if you don't switch to a better system or prepare for a better system. And so what can happen if you don't transition to an ERP too early, or if you transition too late?
I'm actually seeing this with a number of customers that they're using Google Sheets and Excel for billing, for RevRec. We're accountants. We all love Excel and Google Sheets. It gives you easy way to manipulate the data, look at it, but that should not be your system of truth. I could easily hit the backspace button and mess up every formula on there. How do you have internal controls? As a former auditor, that gives me a lot of, concerns when companies are telling me that. Like, how do you know have you missed, billing, or is your rev rec correct? Yeah, we sent out invoices late, and that just, your DSO is so important for small businesses to have that cash flow in there. But if you're not billing on a timely basis because you're relying on a Google Sheet, even though it's easy to use, you are not going to be able to grow and scale the organization in that way, because you're just going to have to put more bodies to be able to manage that as the company grows, not keep a lean finance operations.
To Joe's point, what we see all the time is, people are doing things in spreadsheets. And what ends up happening is that those things actually become so much more work because you're always trying to maintain them. To Joe's point, like, they're accidentally hitting the backspace button and deleting a zero, and then all of a sudden your financials are completely screwed up, and it takes a lot of work and effort. You need to start to enable yourself so that you're not creating more problems for yourself in the future. And one thing that we constantly see when we look at implementations of NetSuite or our products is that a common pain point is that people have gotten themselves into situations where they have such a pain that they're doing so much more work than they need to today. And they finally have identified that they need a new ERP, or they need other financial tools to do their job. So now they have to do the implementation and their day-to-day job, and they don't even have the time for that. And then being able to paint the picture of what the business is going to be like in 6 months, 12 months, 3 years, 5 years, and trying to really plan for that is going to actually create less work and less cost for you in the long run, because you're preparing yourself now for the future. And I think having that insight really helps you make the good decisions for yourself and for the company.
Great advice there, Tyler, and an explanation of setting up for your future, making sure that it's easier for you in the long run, better for you in the long run. As we kind of wrap this up, is there any parting advice for a company who maybe they understand that they're starting to need an ERP system? What advice would you tell them to help them prepare now as they start looking to that?
Yeah, so I like to think of it from a longer term focus. Don't be short sighted that my business needs a system that does X, Y, and Z, because that's what you do today. You need to make sure you're setting yourself up, like Tyler said, for the future. So an ERP has a lot in it, but you don't need every module today. You don't need every offering that the ERP has. You have the ability to grow with it as you need it. But you want that foundation that you can add on to it. You want to be able to add that second, third, we'll go crazy, add a fourth story to the house. You want that structure that's there, where you don't have to move in 2 years or 3 years because you're like, well, now I can't do, global consolidations or send out an invoice in a foreign language. We didn't have that requirement 2 years ago. So then what do you do then? Right. So just making sure you're setting yourself up for not just for today, but in the future as well.
That key component of scale, right? Like, where are you now? Where do you want to be? Where could you go in the future is really questions that you need to ask yourself to make sure that you can add those modules to your ERP and those business capabilities within your finance department. And I think, just to add to that, a good recommendation that I always have for customers is that I feel like the task of getting a new ERP, especially as a CFO, is a daunting task. You need to think about what is the risks of this process, what is the cost of this process, what is the change management of this process. But frankly, you don't need to really reinvent the wheel. Look to other peers in your industry, peers of your colleagues that work at other companies, and get their recommendations of, what are the systems that they've implemented? What are the scalability benefits of those platforms? And what are the feature sets that they have, that things that you might not even have thought of, or things that you need to think of on your journey? And really taking advantage of your network and, recommendations from those ERP providers can really help in that assessment.
Well, Joe, Tyler, thank you both so much for sharing your expertise about when is the right time to look into an ERP. There's so many benefits that are there to join a system like this, and it's so interesting to hear the potential that you could be holding yourself back from, but also how this could hold you back in other ways, and if you don't jump in early enough or if you wait too late. So again, thank you both for sharing your expertise on this topic.
Thanks for having us back.
Thanks.
And now we want to hear from you. Are you considering an ERP for your business? Let us know by emailing hello@zoneandco.com. Finance in the Clouds now posts bi-weekly on Fridays. If you enjoyed today's conversation, be sure to subscribe to Finance in the Clouds wherever you get your podcasts, or watch us on YouTube on the Zone & Co YouTube channel. Be on the lookout for articles and guides all about this topic at zoneandco.com.